This is a demonstration of Exercise 1314B, Asset Retirement Obligation. Oil Products Company purchases an oil tanker depot on January 1st, 2020 at a cost of $2,400,000. Oil Products expects to operate the depot for 10 years, at which time it is legally required to dismantle the depot and remove the underground storage tanks. It is estimated that it will cost $300,000 to dismantle the depot and remove the tanks at the end of the depot's useful life. In the instructions in Part A, it states prepare the journal entries to record the depot and the asset retirement obligation for the depot on January 1st, 2020. Based on an effective interest rate of 6%, the present value of the asset retirement obligation on January 1st, 2020 is $167,516. So the first entry we are going to make is to record the cost of the depot itself. So we would debit depot for $2,400,000 and we would credit cash for the same amount. The next entry would be to record the asset retirement obligation. We know that it will cost $300,000 to dismantle the depot and remove the tanks, but we record the asset retirement obligation at the present value. The problem told us that at the effective interest rate of 6%, the present value of the retirement obligation is $167,516. So we would debit depot for that amount and we would credit asset retirement obligation for the same amount, $167,516. Part B states, prepare any journal entries required for the depot and the asset retirement obligation at December 31st, 2020. Oil Products uses straight-line depreciation and the estimated residual value for the depot is 0. So first we're going to record the depreciation expense for the depot itself. So 10% of $2,400,000 is $240,000. We would debit depreciation expense and we would credit accumulated depreciation depot for that amount. But we also are going to depreciate the asset retirement obligation. It was recorded at its present value of $167,516. So 10% of that would be $16,752. We would debit depreciation expense and we would credit accumulated depreciation depot for the same amount. We also need to record the interest expense on the asset retirement obligation, the liability. The effective interest rate was 6%. So we multiply the carrying value of the asset retirement obligation, which at the first year is the $167,516, times 6%, and that gives us $10,051 rounded for the interest expense. So we debit interest expense for that amount and we credit asset retirement obligation for the same amount. In Part C, it states on December 31st, 2020, Oil Products pays a demolition firm to dismantle the depot and remove the tanks at a price of $320,000. Prepare the journal entry for the settlement of the asset retirement obligation. In the beginning, we believed that it would cost $300,000 to dismantle the depot and remove the tanks. However, it cost us $320,000. So we actually had a loss of $20,000 on the settlement of the asset retirement obligation. So to record the entry, we would debit the asset retirement obligation for $300,000. We would debit the loss on the asset retirement obligation settlement for the $20,000 and we would credit cash for the total $320,000. And that is the conclusion of the demonstration for exercise 1314B.